Okay, so welcome everybody for joining our Orbit 9 demo day in Dubai. I think this is the 6th time we've done it in Dubai, and the 2nd time here at with the Dubai Future Accelerators. So I want to take this opportunity to thank the Dubai Future Foundation for hosting us here for the 2nd time. I also want to take this opportunity to thank our other partners for making this demo day work for us, and thank you for Astrolabs and Carter for working with us for our demo day week. So first off, quick look at agenda. We have some welcome messages from our partners from Dubai Future Foundation, and then a quick update on Orbit startups, followed by VC panel on AI investments in the MENA region, and then we will be ready for the pitches from our founders, followed by a networking session just outside. All right, so without further ado, I would like to welcome Fazal Kazim, Director of Future Foresight at Dubai Future Foundation, to come up and say a few words. Thank you.
Thank you very much. First of all, thank you to Orbit for doing this at Dubai Future Foundation. My name is Faisal Kadham. I am Director of Foresight at Dubai Future Foundation, and I also lead the Dubai program for gaming. But maybe very quickly, can I just get a show of hands? How many people are new to Dubai so I can frame my remarks? Okay, some of you. So just I'll keep it super brief. So the UAE is comprised of 7 emirates. Dubai is an emirate, there's a federal government, and then there's a local government. Dubai Future Foundation is a Dubai government organization. Dubai Future Foundation has a broad mandate to try and make Dubai a leading city of the future. Very ambitious and very hard as well. And so it's kind of difficult to describe everything that we do. We're trying to put Dubai or move Dubai or position Dubai 10 years in the future. So a lot of the work that we do is research-based. We do a lot of scenarios work, and we are entrepreneurial as well. And I know everyone says this, like there are prehistoric, traditional companies that call themselves entrepreneurial, but I'll just give you a couple of examples of how we are entrepreneurial. I was actually in this very room doing, we had like an ideation session. It was almost like a demo day. We were all pitching ideas for Dubai. And I had pitched, so I'd heard about, so this was like 5 or 6 years ago. I had heard about companies like, large companies like Tesla selling hundreds of millions of dollars worth of carbon credits. And initially, that's how they were profitable. And on the other hand, I was hearing about companies like Microsoft that were not only looking to become carbon neutral, but they were looking to erase their historical emissions as well through the purchase of carbon credits like Tesla's. So then it was a simple pitch, like what, and all this was done through carbon markets. And I know there are a couple of climate tech companies here as well. I'm looking forward to hearing from you as well. So the pitch was, what if Dubai could host a voluntary carbon market? And it was as simple as that. But then that pitch got a lot of people in the room excited. And then that pitch led to, okay, building it further and pitching again, but this time pitching a feasibility study. And then it was well received by Dubai's leadership. And then we were asked to develop it further. And then we pitched an action plan, and then we developed it further, and then we pitched it to a higher committee, and this idea that just started with, just like one sentence, turned into a pilot with the Dubai Financial Market, running a voluntary carbon market during COP28 with actual transactions happening. The platform's been built. All this happened thanks to that, kind of that pitch and that entrepreneurial, I guess, process. I'll give you one other example because this one was almost like bottom up. I know I have only 5 minutes. I'll try to wrap up. The other because we're Dubai government, a lot of what we do is also top-down. So we were asked, Dubai leadership has identified the games industry, as in the video games industry, as a significant industry. So develop an action plan. So exactly the same process, a lot of pitches, and a lot of grilling, a lot of blood, sweat, and tears. But then finally, we did end up pitching to the highest levels of government, and we launched the Dubai Program for Gaming 2033, which was launched by His Highness the Crown Prince, and that was the first time that gaming, at least in the region, was portrayed as an industry of strategic importance to the Emirate of Dubai, coming directly from the Crown Prince. So yeah, very entrepreneurial. But I'm not saying that what we do, as government employees, is anything like what actual entrepreneurs do. I know you go through a way tougher process, and yes. So I think I'll end it here, but I will be around if anyone has any questions about Dubai, about our ecosystem. Please come and talk to me, and then I think on to the more exciting bits, which is your presentations. Thank you.
To developing of the gaming community here in Dubai. Next, I would like to welcome William Baobin from Managing General Partner of Orbit Startups to give us an update of the latest developments in the Orbit ecosystem.
Yeah, thanks so much. So at Orbit, we're focused on backing founders that are working on using technology across the global south. We are focused on Asia. We're investing in Africa. We're in Latin America, and we're definitely in MENA. So Magnet, our dear friends there, they've ranked us in their MENA investment report for 2023 and for 2024 and first half of 25 as the number 6 most active investor. I have no idea why we're always 6, but I think we're going to have to make a T-shirt for that. So we've so far helped our companies post our investment raise almost $900 million. So this is a group effort. Thanks to all of you for coming out, and thank you very much for backing the startups that we're introducing to you. So we couldn't really do it without you. Our companies, we partner our companies with a lot of corporate partners, from handset phone companies to telcos, including Etisalat and Ooredoo. And there's a bit of a swap. So in return for access to our partners' users, we give our companies give our partners back lifetime profit share. And so from 2020, we scaled from 30 million monthly active users in the portfolio to 169 million today. And the key thing is this is without spending money on Google ads. So we've invested about 79 million. Others have invested almost 900 million after us. So we're now pushing above the 10-to-1 ratio. So one of our companies 2 weeks ago announced the largest exit in media in India in the history of the country. So Videoverse uses AI to edit automatically in real time sports content. So if you many people sit there and watch the game, but most people are now consuming more on their devices. All right, so now they can watch the game in real time through highlights. So they're trusted by the Olympics, by F1, by Champions League, and by the US NFL, and they just signed FIFA. So the press reported a $270 million exit. We invested in 2020 pre-seed as their first VC. So very happy for Videoverse in their future. Yeah, so we have one of our companies, Buskaro, and Maha's the founder, and she used to be the head of Swivel in Pakistan. One of the challenges there is that men spend 10% of their salary getting to and from work, but women spend 30% in order to get to and from work safely and efficiently. So what Buskaro does is they have vetted drivers with cars, vans, and buses, taking people to and from work, and also students as well, at a lower cost. So they're doing about 550,000 monthly sales. They just closed a $2 million round. They're growing about 17-18% quarter on quarter. And they're serving companies like Citibank, also Daraz, and others. So particularly happy about Buskaro. Okay. Next one is Refurby. There's many people who always want to get the brand new iPhone, but around the world, there's people who can't afford that brand new iPhone. So we've invested in 4 companies, including Refurby, that takes secondhand smartphones, analyzes them, takes out the components that are going to likely break and recycle them, refurbish them, Refurby, and then sell them with between a 6 to 14-month warranty. So Refurby is doing quite well. They're growing at an 85% CAGR since 2020, and they're currently doing $8 million in annual GMV. So it's doing good and also doing well. The key thing is that the company is profitable. And then finally, Muta. One of the challenges with recycling, aside from people not really doing it, is that if you recycle outside the home, if you take the recycling and mix it in with the food waste, you can't actually recycle it. So there's A grade, B grade, C grade, but if it's brown, blue bottles, right? Blue bottles, the browner the bottle gets, the harder it is to recycle, the less money you can make. So Muta works with both restaurants and others to separate at the source. They're partnered with the likes of Burger King, Hooters, and also something called Frisbee. I don't know what Frisbee is. I assume it's a burger joint. And they're expanding across Peru and Mexico. So again, profitable growth. So with that, I'm going to kick it back to Kelly. Thank you so much.
Thank you, William. Please stay on stage for a sec while we set up our VC panel. Today, very proud to have with us today Vikram Dinger from Unbound, Sonia Gokel from VentureSouk, Paige Kanani from Carter, who will be moderating, and have William back on stage.
Afternoon, everyone. How are we doing? Good. Who was there last night at the mixer? Hands up. Had a good time? Lemon sorbet was good? Amazing. Favorite. Well, welcome everyone to this panel on AI investments in MENA. Thank you so much for my panelists for being here. We have about 15 minutes and very excited for this conversation. Just do a quick round of introductions. Let's do your name, what your main investment thesis is, and one word to describe AI for you right now. Let's start with Vikram.
Hi everyone, pleasure to be here. I'm literally fresh off the boat, so I was one of the 2 people who raised their hands, landed 1 month ago in Dubai. I was based in London for the last 10 years. I work for this firm called Unbound. We are growth stage investors. We typically come in at Series B, focusing primarily on B2B software and fintech. And the one word, I'll say which everyone is saying right now, a bubble.
What's that?
A bubble.
A bubble. Okay. We'll talk about that, yeah.
Hi, my name is Sonia Gokhale. I'm one of the founders and general partners at VentureSouk. VentureSouk is an early stage VC based in the MENA region. And regarding AI, I'm by no means any expert. We have actually Venture6 experts in in the audience here, so I might tap him in at some point. But Roba's here. But the one word I have to say is it's overwhelming. It's overwhelming. Yeah.
Overwhelming, I can feel that for sure.
Yeah, so William, thank you so much for being here. I'd say for me, we're just really focused on revenue.
Awesome. Okay. Nice. So bubble, overwhelming revenue. So as you can see, there's quite already a contradictory of opinions here. Certainly, let's talk about that. So we're obviously seeing all of this investment going into OpenAI, Anthropic. Where in the cycle would you say we are when we look at AI innovation right now? Is it a bubble? Are we still early? Are we still experimenting? Are we in this scaling phase? How would you describe where we are in the cycle right now? Let's start with William.
Yeah, I'd say we're still pretty early. You know, I think there's technology, and then there's a list of problems. And the list of the problems usually stays about the same. What changes is the technology. And so in terms of the technology with AI solving the problems, there's a lot of opportunity, but it's not actually being realized yet. And then once you start solving those problems, then you get to the revenue part.
Yeah, I agree. I think we're very, very early. I think there's a lot of potential. There's a lot that can be done that's still going to be done, and it's actually very exciting to know that that literally by the week it's evolving. So we're still very early, and I think we'll consistently be very, very early if things are evolving at the pace that it currently is, which can be exciting and overwhelming at the same time because we just don't know what's coming next. If we're talking about valuations, which I'm not sure if we want to get into, the hype is real, right? And that's kind of shows the early in an ecosystem or early when a hype, the hype is real. You are seeing insane valuations in AI, and that's because people just don't want to miss the boat. They're seeing there's so much happening, there is so much potential. And they're seeing it's evolving over time. The investors just want to get in now and will pay the price to do it for good companies.
Yeah. No, I think from the innovation point of view, totally in sync. I think we are still in the early stage. A lot of focus right now is on the software side. Hardware side is still something yet to be explored. We saw with DeepSeek how much value can be extracted just by optimizing the way you are creating GPU clusters. So I think that part of the equation is still, I would say, we have an incumbent. I don't know if we can call them an incumbent or not, but NVIDIA, which is gathering all the headlines. We are seeing how AMD is catching up. So I would say that part of the ecosystem is still untouched. So there's a lot to be done there. On William's point, I think I echo the sentiment. It's feeling as if we are slapping AI as a solution to all the problems that we are seeing, rather than getting excited about the problems and then figuring out if it's an AI native problem or not. So that's a very different way of thinking about whether you get excited about a long-term problem-oriented way of solving or serving customers, or just getting excited about a technology and slapping it left, right, and center.
Got it. So Sonia, you mentioned valuations. Let's talk about that for a second. I just realized I didn't introduce myself for the people who don't know me. I'm Peji from Carter. Carter supports about 65,000 companies globally with equity management valuations, and we publish a lot of data. It's completely free. You can check it out online. And we did publish one a data point which was interesting around valuations of AI companies and non-AI companies. And for median pre-money valuations of Q2 last year, non-AI companies at seed stage was 12.7 million. AI companies was 18.9 million. It's a pretty big difference.
Yeah.
So when we think about kind of the valuation, the overvaluation, let's say, how is that? Do you think that's there to stay? Do you think we're going to normalize? How do you think about this valuation hype that we're in right now?
Okay, so I'd say for us, we don't really have the luxury of playing with the hype, because our investment's a set amount, and our valuation range is basically a set amount. And either the founders want the help or they don't want the help that we bring. We help with sales. So what we're seeing of the portfolio companies that we have backed is that we're really pushing them to be kind of like rational about things, because the easiest way to blow up your company is to raise it too high a valuation and then not have the traction come through. So, if you have sales, then you don't need so much money, hopefully. But let's have like a more step-by-step rational raise to the valuation. And so most of them are taking the advice, not all, but most of them.
I'll give you a little anecdote. I was in London last week, and I was with a global VC guy, and I have been asking all the bigger guys that have like $1 billion to invest and can spend them out to get their ownership of a large valuation. I was like, "What are you guys doing in AI? How are you doing it?" And he's like, "Well, we got to play with the big guys because otherwise there's no choice." They just invested in a company, didn't tell me the name, but it was a $200 million valuation for seed. And it was moving so fast, they didn't even go to IC. They had to like sign on the spot, and it was good founders that were starting up. So it's there, and people are doing it, and it's happening. We on the other side don't have that luxury. We're investing locally. We're investing in companies that are AI, that are using AI significantly to help even just build efficiencies to solve the problems they're doing. But they generally are not AI. Like it's not they're solving a problem with AI instead of the other way around. And even then, we're still seeing the companies that are heavily using AI or considered AI companies are getting a definite premium in valuation.
I don't know. We'll see how we perform in the coming years. But the memories of 2021 cycle are still very fresh in my mind. Yeah. To be very honest. So I think we were very careful in deploying capital at then. Very similar. I think all of us have a valuation range, whether you are at pre-seed, seed, growth. Mm-hmm. Because if for you, it's the ownership. For us, it's a check size on a risk-adjusted basis. So if someone is coming at 200 million, maybe seed, then clearly the growth investor will be expected to come in at $1 billion. Yeah. And how many companies actually get exits at $1 billion? It's hard. And the other point I would add is it's not just the private companies, even public companies. I think there was a recent analysis where, barring the 10 companies that are getting all the benefits of AI, the rest of the stock market in US has not performed well. And on a growth-adjusted basis, in fact, the multiples have gone down. So it's not just in the private market we are seeing this exuberance, it's also reflecting in the public markets. The one interesting trend we have seen is any founders who raised capital had to go through restructuring during the 21 cycle are very hesitant to raise at such lofty valuations. Yeah. They have seen the pain. Mm-hmm. The scars are still fresh. Yeah. The memories of sitting across the board with your investors and having tough conversations are still basically something that they relive every day. So they are very careful. Yeah. So I'm saying you have to be very careful about which founders you get gravitated to and which founders get gravitated to you. And I think there's this careful balance that you have to maintain during these periods.
Yeah, I think that's a really good point, actually. I think the memories of 21 still, and we're seeing that in the data of number of down rounds now. I think more than 20% of rounds now are down rounds, which is a result of the hype we had in 21. Right, let's bring it home. We have a lot of founders in the room. Talk to us about a recent deal you've done. It could be, a pure play AI company or a company who is, taking more of an AI approach. What convinced you to write the check for this company?
Okay. So while we are all basically thinking about this doomsday scenario with the AI valuations, we have taken a thesis or a stance where if so much money is going to be poured in AI, something good is going to come of it. However, a lot of bad also comes of it, especially in the early innings of any technology adoption. So we are spending a lot of time on cybersecurity. One of the key concerns that we have is while every part of the digital ecosystem is focusing on all of us in the room trying to adopt either digital payments, e-commerce, and other services, all of us are not protected at all the time by any cybersecurity solution. So we have backed a company called Whalebone. It's a Czech-based company which is distributing consumer security product via telecom. So their mission statement is to protect 1 billion customers. There have been some attempts in the past to protect consumers, but if you spend some time in the cybersecurity space, you will realize that app-based cybersecurity products have not been successful because you can't deliver patch updates every hour or so, because none of us really update our apps that often. So via telcos is something that really excited us, and they're already working with 50 telcos. We are actually actively helping them come to the region. So hopefully in the coming, I would say, quarters, you will see some big announcements happening here.
We invested in a Saudi-based company called Mozen, very like AI-based company. Their main product is called Focal, which is AML compliant, anti-fraud. The great thing about them is it's very hyper-focused. It's based on local language, local data, local regulations, which is really, really important. And they can build that way. So and very heavily AI focused company. So extremely excited about that company, and they're doing very well, kind of solving similar like in terms of hitting compliance particularly. We also invested in a company called Orbi, which provides credit solutions for companies, very heavily based on AI, using local data. So it's the kind of trend that we're seeing is that we're investing in AI companies that are hyper localized here, and they can grow very fast.
Yeah, so we have one, you mentioned earlier games. It's a Dubai company. They're in Orbit 8, so Dubai-based, Elevatix. And it's a little plug-in. You plug it into any sort of like online game, and then it learns about what the users are doing, what they're clicking on, what they're interacting with, and it helps the game choose what to show them in terms of in-game purchases. So it's leveraging AI to just help optimize the game. And you basically plug this thing in, and it increases revenue by 15 to 20%. That's it. Okay, done. Yeah, so we're pretty happy with Elevatix.
Incredible, yeah. It's so interesting to hear like practical examples of investments you've done, and certainly the applications of AI on a regional basis. I think that's super exciting to see, because these big AI players, incredible technology, but there's so many use cases and niches. We see in the translation space or in the fintech space locally here. There's a lot of opportunity. Last question, for companies that aren't AI first and they're in kind of different business lines, what advice do you have for founders to start thinking about shifting their business model or introducing AI into their company? The dominant logic there is cost efficiency and reduction, but at Carter we think a lot about leverage and how can you 10x using AI from a customer experience perspective, for example. What advice would you have for founders when it comes to AI for non-AI first companies?
Sure, I can start. So I think to the extent possible, you should be using it as much internally. Even just you can use it to interact with your customers, your clients, et cetera, which is great. You can wrap many solutions into your experiences, but you should be even using it just internally in your business. We ourselves have done that. Robo over there has brought in a lot of efficiencies in AI into our daily practices, so we're able to do everything more faster. You can use AI just to reduce your burn, which is huge on its own, right? So I would equate it to like back in the day, not writing letters and not using email. Like you should be using it. It's a technology that's here and it's powerful. So every company should be using it in some way or form, just to build efficiencies internally.
I think Sonia has well covered all the points on internal productivity hacks. I think it's not an option. I think it's a bit of a must-do situation, especially on the tech talent. I think, yes, there are the likes of Lovable and Cursors, which you can just leverage. And I think it helps in prototyping a lot quicker and faster with very minimal risk or deploying resources. I think in terms of, and we have a lot of companies who build SaaS solutions and who are now going through this journey. So one thing I would suggest is, I think two things actually. One, it's a long game. You should always reflect on why did you start the company. Cycles come and go. It's all about embracing the change and trying to make sure that you are staying relevant, and what makes you stay relevant is an important question to ask. But don't get distracted, because you don't want to change your entire business and just in 6 months the whole cycle gets killed and you're like, okay, you're back to square one. So that's, I think, something. And the other thing is try and evaluate where the budgets of your customers are going. What has happened is people underestimate how difficult it is to release budgets from enterprises. They are set early in the year, so if you're a mid-cycle, no matter how hard you push, you're not going to be unlocking any more further budget. So try and understand where is the next budget opening up. And if there is a way for you to attack that budget, please do so with all the focus. That's very important, because that's where you start getting momentum. I think the worst thing that is happening to a lot of SaaS founders or companies which are not as AI native as people hope them to be is they have lost momentum. And picking momentum again is the hardest piece while building a company. So that's something that would definitely help them.
You want to take it?
So we're more into like, instead of telling, showing. So we did this exercise, Lean Startup Machine, which is a 2-day exercise where the founders basically research, do interviews, create a product, and get revenue in 48 hours. So you don't really have that much time to do much stuff. You know, one of the founders who, he's got a student travel platform so kids can get to school, right? And he's like, how are we going to launch this like test product for this other thing? So we gave him 5 no-code, products to choose from, and like he built the product for the test thing in about 20 minutes. And then he started using it for his own company, and the next week he had all these dashboards and updaters and this little option where you can find your kid on a map, and it just rolled it out to all the parents in Egypt. So sometimes like you don't really know what you don't know unless you actually use it, and like the guy's head exploded. He's a finance guy. He's like,
Incredible. Vikram, Sonia, William, thank you so much for your insights. It's been very insightful. Thank you for the audience, and good luck to the founders. Looking forward to the pitches.
Thank you, Paige, for driving the interesting conversation. Thank you for William, Sonia, and Vikram. So finally, we're ready to listen to our founders. Today, we have 10 startups who will come to the stage and tell you about their business. After each pitch, there will be a QR code. You can scan that and indicate your interest to connect with them further and have a further conversation. And so without further ado, I would like to invite our first startup, PK from Daleel.
Good evening, everyone. In MENA, 65% of population is under the age of 35, and all of them enjoy highly personalized experiences offered by likes of Amazon, Netflix, or Spotify. But financial services have yet not caught up. People in the region tend to maintain their savings account, credit card, investment, and lending in 3 to 4 different banks. So no single bank has the holistic view on customer financial data and behavior. And since they don't know when to offer the right product to the right customer, but they continue to spend hundreds of millions of dollars in targeted marketing effort to the customers. But since they don't have the access, they don't know when is the right time to offer a right product to the customer. We are Daleel, region's first personalized financial marketplace, where we partner with many banks to offer personalized products and offers to their customers, leveraging deep insights from our platform. Let me show you how it works. So Ahmed can simply download and log into our app and find any financial product available in the market. Ahmed is interested in finding a credit card which gives him more air miles. He doesn't know what is best for him. But since we have his employment data, salary, and other preferences, our personalization engine is able to present to him curated offers from 3 different banks. And Ahmed can choose the product with a click of a button and get it delivered at home. Another customer, Mariam, has been with Daleel for 1 month. But with open banking integration, we have her financial transaction data for 2 years. And we know Mariam is an avid traveler. So we are able to recommend her a better card, which will give her more miles on her Emirates travel. On the back end, we take these insights and deliver it to the banks so that they can offer personalized product and offers to their consumers and get them at lower cost. We make money by selling the insights to our customer banks, as well as charging 10 to 15% commissions on product sales on our platform. With a young and tech-savvy population in the MENA, we are talking about a huge opportunity of $450 billion. With deep integrations with the banks in the region, we hire hyper-personalization at scale. NerdWallet and ClearScore offer the same, but they don't operate here in the region. I am PK. In 2018, I built the first open finance platform in the region. As the founding managing director of Tarabut, I scaled the company from an idea to $2 million in revenue and more than $50 million in fundraise from likes of Visa, Global Ventures, and other investors. My co-founder, Rida, built and scaled cross-functional teams at Tarabut from 8 to 80 people and secured licenses across UK, UAE, Saudi, and Bahrain. Supported by an experienced team with deep experience in HSBC, Nestle, and Tarabut, we have acquired more than 18,000 consumers with zero marketing spend. We are proud to announce that we have onboarded 15 banks partnerships in the region.
And next up, we have Alex from UFarmX.
Hello, everyone. How are you doing? The continent of Africa has nearly 70% of the farmable land left on the planet. And 80% of the African population works in food production. Yet, African farmers produce at a rate 11 times lower per acre than their North American counterparts. This is due to lack of access to high-quality inputs such as drought-resistant seeds and fertilizers. And lack of collateral and credit histories prevent farmers from getting bank loans. Therefore, no loans. This has created a $75 billion farmer financing gap annually across nearly 600 million farmers. That was until UFarmX had successfully cracked the code to African farmer finance. We've developed a patent technology that is able to use everyday basic farmer data to generate reliable credit scores, making smallholder farmers lendable for the first time ever. This is how it works. Farmers are able to sign up through trusted local retailers, and basic information is collected such as crop history, land size, and location. Our AI then generates a credit score. Farmers that are approved are then able to access inputs, high-quality inputs on credit through those trusted local retailers. Retailers are then paid post-harvest with zero payment risk, while we earn revenue off of platform fees, transaction fees, and interest spreads. Our current default rate using our technology is below 10%, so we're already significantly outperforming traditional banking institutions in our markets. And with every transaction, our AI gets smarter, driving down default rates even further over time. Africa's agricultural market is currently exploding. It's valued at over $500 billion annually today and projected to reach over $1 trillion annually within the next 4 years. We've already been able to assist farmers in Nigeria, Senegal, and Liberia generate over $3.5 million. And if we're able to just capture 5% of the market, there's an opportunity to do over $4 billion in annual revenue. We've already established 3 unassailable moats. Our patented AI technology is powered by real, on-the-ground African farmer data that we've collected ourselves. And with every transaction, our credit models get stronger. We've already established partnerships with governments, developmental agencies, and multinational insurers. And our team consists of 2 two-time founders, one of which is a former Forbes 30 Under 30 fellow. Our CTO is a former NASA and Raytheon engineer. Our head of finance is a PhD adjunct professor at Nottingham University. And then you have myself, Alexander Zanders, a lifelong entrepreneur that has previously bootstrapped an export company to over $10 million in revenue across Nigeria, Dubai, and the Dominican Republic. UFarmX has been recognized by the IFC World Bank for our innovation, and we're backed by global VCs such as Techstars and Orbit Startups. We currently have over 8,000 farmers on platform, and we've been able to successfully use our technology to not only triple farmers' yields, but more than double their revenues. As previously mentioned, we've been able to generate over $3.5 million in GMV, and we've done over $1 million in revenue to date as a company. And unlike other companies, we're able to integrate within existing systems instead of having to replace them. And our B2B model allows us to engage farmers where they are and still collect unparalleled levels of insight. For every farmer on platform, we have individual headshots, pinpoint GPS locations, and full transaction histories that are impossible to replicate.
And next up, we have Santiago from Rashko.
Hi, everyone. People living in big cities spend 1 month of their lifetime waiting in restaurant lines, 2 months waiting for dining services, and even worse, 3 more months waiting for delivery that sometimes arrive late and cold. Those months are being wasted, but we can spend it with what truly matters. Be more productive, enjoy your favorite sport, share with your family, and get the fresh and hot food that you are paying for without wasting your time. We are Rashgo. We allow people to pre-order and pay from any place so they don't have to wait at their arrival to a restaurant. With our customers can serve immediately fresh and hot food when they arrive with our Predine app. Let me show you how it works. User downloads Rashgo app, creates an account, and navigates to their favorite restaurant at his destination point. When he navigates into the app, he selects the app works dynamic according to his available time. He selects his meal and chooses between dining or takeaway. And voila, Rashgo AI synchronizes his GPS location, the arrival time, and the restaurant's kitchen. The order is being prepared while the user moves to a restaurant, and when he arrives, everything is ready just on time and served right away. With Rashgo, users no longer have to wait, no more cold delivery food, no stress. With Rashgo, restaurants can serve over 50% more customers per day with Predine. And from every order, we take 10% commission from restaurants. In average, each restaurant gets $5,000 in sales through Rashgo, increasing their revenue. If we just capture 1% of the Western European market, we will reach a 57 million market opportunity. We just launched in the US with a 150 million market opportunity with the same 1% of the market. We are better because we are the only ones that eliminates the wait at dining and deliver fresh and hot food, while our competitors are delivering late, cold, still, and wasted your time. I'm Santiago Moncada, CEO and co-founder of Rashgo. At Kuala Unilever, I negotiate 100 million in brand sales, deliver 30 million in cost savings, and I'm also a serial entrepreneur. I founded Mimbi, a fintech platform that reached 148 million before exiting, and GoFries, a restaurant chain that I bootstrapped with my co-founder from 1 to 70 restaurants before successfully exiting in 2024. Miguel is our CFO and second-time founder. At Manuelita, he leads 10 million investments, and at United University, he drives scale financial capacity from 30 to 75 million. In Portugal, we tested Predine and signed up 70 restaurants with 50,000 active users, reaching 150,000 monthly GMV at peak season, helping restaurants to increase their revenue from $5,000 to $10,000 per month. We are happy to announce that we just signed a strategic partnership with the Houston Chamber of Commerce to serve more than 7,000 restaurants in the Houston area.
And next up, we have Abbas from Malbazar.
Meet Omar. He leads a mid-sized company with 300 employees. Every year, he wastes months talking and sending emails to his insurer to manage his rigid and outdated policy. In fact, Omar only knows a few insurers, not the ones that offer policies that best fit his needs. Ladies and gentlemen, we are in 2025, and the insurance process is still very manual and time-consuming. But Omar knows that insurance is critical for his business. Yet, premiums are high, service is poor, and there's no real transparency. For millions of business across MENA, like Omar's, the commercial insurance is broken. Malbazar is a digital insurance and financial broker that redefines how businesses access and manage insurance and financial products. starting from discovery, management, and even renewal, all from one single place. Let me show you how it works. Omar signs up on Mal Bazaar and sees a wide array of insurance policies by top insurers. He then selects the insurance policy that best fits his business needs. From there, he can track, manage, and renew all of his policies from the personalized Mal Bazaar dashboard that is integrated with insurance providers. On top, his employees benefit from discounted personal insurance like motor insurance and car insurance. And on average, we make 13% commissions from the policies that we sell. In MENA, there are 22 million businesses that employ a staggering 250 million people. We started Mal Bazaar in Egypt, and we are growing across MENA region, making this a $100 billion market opportunity. We've developed a seamless digital brokerage that combines both insurance and financial products, putting us at an advantage versus legacy insurance brokers, traditional banks, and even other insurtech players. The founding team behind Mal Bazaar combined both insurance and tech. I'm Abbas Gamal. I started my career at Procter & Gamble, working on global brands like Ariel and Pampers, and then moved to work extensively in insurance brokerage. My partner, Ahmad Diftar, is a tech expert that developed through his software development house, AXA Egypt's operating system. We are on our way to deliver $400,000 this year in commission revenue with $35,000 in MRR. We're currently serving more than 70 businesses that employ more than 80,000 people. And our retention rate is above 90% versus a market average of 65%.
And next up, we have Shawan from Chhaya.
Hi, meet Salma from Dhaka, Bangladesh. She works in a garments factory and earns just $150 a month. She seldom visits the doctor because the healthcare is unaffordable to her. 98% of the population in Bangladesh, like Salma, are uninsured because they think that money you put into insurance goes into a black hole. At the time when you need the money, it will never come back. And when you will claim, the claim will get rejected. In fact, in Bangladesh, 50% of the insurance policies get lapsed due to inefficient system, and as a result, indeed, many of the claims get rejected. Why? Because in Bangladesh, the insurance is still working in an archaic paper-based system. People have to remember the payment dates, and in case they forget or don't make the effort, it becomes lapsed. We at Chhaya to solve this particular problem through our end-to-end paperless and cashless digital solution, where anyone can self-enroll in just 3 minutes, can make the claims within our mobile application, and receive the amount back through wallets, making it totally digital. While browsing Facebook one day, Salma discovers Chhaya. The following day, she finds an activation team right in front of her workplace, and she has an opportunity to talk to them, and they explain to her the benefits of Chhaya and how it can enrich her lives in terms of better health accessibility. She completes registration within just 3 minutes by providing very basic information, chooses the plan that best suits her need. In addition, she also gets access to our 200+ partner hospital network and receives up to 40% discount on healthcare bills. And now, as her coverage gets activated, she has access to quality healthcare with affordable prices. While she needs to submit the claims, she just takes the photo from her mobile phone, uploads it, and sends through our mobile application. And the claim is also settled to her preferred e-wallet or bank account. Currently, there are 88.9 million active e-wallets in Bangladesh. And through this, there's a market opportunity of $3.2 billion for micro-insurance insurtechs like us. We, in addition to acquiring customers, are educating through our in-person activations, whereas the competitors we have, they're mostly marketplaces. With the founding team, we have extensive experience working in tech-related industry. I worked in Grameenphone, the largest telco in Bangladesh, and also in startup ecosystem. Our co-founder, Saiful, looks after the operations of the company, and he also has experience in fintech and other tech-related industries. We're the fastest growing insurtech within Bangladesh. And currently we have 52,000 active paid customers. And our retention rate is 90% after first year, which is 50% in the industry. Last year, we grew our ARPU 3.3x, and we have just crossed 100,000 USD MRR last month.
Thank you, Shawan. That was Chhaya. And next up, we have Mustafa from Resiliox.
We're halfway there, so all good. In 2004, Hollywood was trying to imagine what a climate-related apocalypse would look like, and this is what they came up with in the movie The Day After Tomorrow. And this is Dubai last year, when a year worth of rain came down in just under 1 day. As you can see, we're not very far off. And it's not a one-time thing. Over the last decades, the number of billion-dollar events have been steadily increasing and almost doubling decade after decade. With 2024 being a record year with over $320 billion of climate-related losses worldwide. Right now, there are over $100 trillion worth of assets that are facing devaluation from climate exposure. Meet Midhat. He manages a portfolio in Dubai, and in that single day in 2024, his portfolio lost over $500 million in losses. Right now, he is stuck between static Excel sheets, very expensive consultants, and no actionable intelligence whatsoever to help him reduce those losses on the long term. But it doesn't have to be this way. We are Resiliox Intelligence, and we've developed an end-to-end platform for this solution. We go all the way from predicting the occurrence of those events, to quantifying their impact and associated financial losses, to generating measures to reduce them and telling you what to do about them. And the platform is fairly easy to use. You just log in and get immediate AI-driven risk insights on your entire portfolio. You can start filtering by the different types of hazards, different climate scenarios, and different years into the future. And that's not all. You can even start zooming in on each individual asset within your platform and get tailored exposure and risk insights. And our platform generates adaptation measures and calculates the ROI on each adaptation measure that we recommend through the platform. Had Midhat used our platform 1 year prior, he would have, with 90% accuracy, predicted the occurrence of that event. Our models would have proposed measures that reduce the exposure by 70%, resulting in total savings of over $200 million. And of course, the market for this is huge. We're talking about over $80 billion by targeting the 20,000 institutional investor and asset owner in North America and the MENA region alone. And we're targeting a $100 million piece of that market in the first 5 years. Of course, with a growing market, there's growing competition. But what truly sets us apart is our capacity to do engineering-grade modeling rather than financial modeling, which allows us to have complete control over the variables that we account for in our analysis, enabling us to give you actionable intelligence and ROI on each adaptation support measure that we recommend. To do so, you need a very specialized team. With a PhD in AI-driven climate risk analytics, I have delivered climate adaptation projects in 3 different continents with clients with portfolios that exceeded $8 billion. My co-founder is director and founder of the first and largest multi-hazard systemic risk institute in Canada, and he developed models that went on to raise over $20 million in funding. With less than a year of operation, we already have 5 strategic partnerships. We completed 3 pilot projects, and with less than a month of running out and testing our product, we have projected revenue of $20,000 by the end of this month.
Next up, we have Alejandro from Gelt.
Hello, everyone. In Latin America, healthcare providers such as hospitals and clinics need to deal with hundreds of different suppliers in order to get the medical inventory they require to run their daily operations. So they spend a huge amount of time managing information on WhatsApp, phone calls, and emails, bargaining for the best prices with suppliers, and arranging their own logistics and deliveries. And because their management is done on hundreds of spreadsheets, at the end of the day, it's a total cost for them. So healthcare providers are over-ordering, over-ordering, and overpaying. That's why we create Jolt. What is it? An AI-powered end-to-end supply chain platform for the healthcare ecosystem all across Latin America. Through us, healthcare providers can acquire, manage, and even finance the medical inventory they require for their daily operations just through one channel. Let me show you how it works. First, our trusted network of more than 100 different suppliers leads their products into Jolt. Because navigating between thousands of SKUs is confusing for our customers, we help them with our AI agent purchase assistant to identify the product that they're looking for. The agent set the order for them as well, and after the purchase, it even helps them with the management of the inventory that they just acquired through us. Now, customers can pay online or they can choose financing. Jolt earns 30% on each sale. We arrange the logistics and the deliveries for our customers through our network of logistic providers. So clinics and hospitals can track in real time where their order is. Now, after the purchase, our AI-powered management system predicts when our customers need to reorder, and we send them reminders through WhatsApp. So Jolt is the easiest, fastest, and cheapest way to purchase medical inventory for the Latin American healthcare ecosystem. But now, suppliers benefit too. We represent for them a new sales channel at a zero acquisition cost. We are targeting the clinics and the hospitals all around Latin America that lack procurement technology for an 140 billion opportunity per year. Now, if you compare us between other competitors of the region, like, I don't know, traditional wholesalers, you're going to notice that Jolt is the only solution that offers everything what healthcare providers are looking for regarding the acquisition, management, and financing of medical inventory. And we are doing all this without even having to storage any amount of inventory. This is an on-demand solution for the industry. Now, who I am? I'm Alejandro, and this is my second time as a founder in the healthcare industry. I successfully boosted my first startup from zero to more than $5 million on annual revenue. Now, my co-founder, Sergio, he's the CTO, and he used to work for EY, leading the AI and cybersecurity team. We are already working with some of the biggest worldwide brands in the healthcare industry, such as 3M, Johnson & Johnson, and Boston Scientific. Right now, we already served more than 3,000 hospitals and clinics all across Colombia, and in less than 2 years, we have generated over $1.4 million in total GMV, with current monthly sales of $120,000.
Next up, we have Dan from Throughput.
Good evening, everybody. Meet Hamad. Hamad runs a healthcare enterprise in Saudi Arabia. Now, Hamad is under pressure to comply with strict regulations that governs how his data and assets are managed, and he's chosen blockchain as a solution. However, after investing, he realizes the truth. Today's blockchains are not compliant by default and are extremely inefficient running on large data. His patch system fails audits, lacks sovereignty, is extremely expensive, and actually can't be fixed. Hamad is stuck, but he's not alone. From healthcare to finance, from energy to telco, industries wishing to utilize blockchain all demand something that provides compliance, flexibility, performance, and cost efficiency. Our solution is Throughput, a plug-and-play infrastructure as a service where teams can launch their own blockchain at a fifth of the cost in days rather than months and benefit from resources on demand, saving up to 65% on operational costs. Projects access Throughput via the web application and sign up. In just a few clicks, they choose a subscription and customize their chain to meet their own individual needs. Within hours, the chain is live, and then the project dashboard can be used to monitor usage, add and remove features, and scale throughput, managing costs and performance. Our current target market is Saudi Arabia, due to our unique positioning within the kingdom. Across the main sectors in the country, blockchain-based revenue is currently around $230 million, with most projections into the multiple billions by 2033. Available options to rival Throughput are currently expensive to run and complex to set up. Additionally, these platforms lack the sovereignty and flexibility provided by Throughput. My name is Daniel. I spent 10 years within the UK national security domain, during which time I was responsible for the security of £700 billion of critical national infrastructure, as well as the country's most sensitive secrets. With me is Shoaib, He's a former country lead at OKX Exchange, where he tripled futures volumes to $125 million across C countries. Alvin is a former chief architect at Filecoin, where he pioneered the decentralized data storage landscape. We currently have 14 projects signed up across a variety of sectors. This has exposed us to around 300,000 early ecosystem users. We have a signed partnership with the Ministry of Communications and IT in Saudi Arabia, driving engagements with multi-trillion-dollar projects such as NEOM.
Next up, we have Iñaki from Climatta.
Companies pay every year $5 trillion in energy. And in average, they are paying $300 billion more than they should, but they don't know where they are overspending. The data is fragmented among different utility providers, each one presenting the information in their own way. The data is hitting utility meters that nobody reads, and departments work in silos and they don't communicate or share the data. The end result, companies end up paying the utility bills without asking any questions. Today, cutting energy costs is not just about sustainability. It's about profit and survival. We're Climatta, an AI utility management platform that turns bills into savings. We help companies streamline the whole utility management process, from collecting the data, analyzing it, creating energy transition plans, to compliance. Everything with just a couple of clicks. Let me show you how it works. The company registers the assets and selects the utility company. With a single setup that takes less than 30 seconds to do, our data scrapers connect directly the utility company to our software that, once synced, will extract all of the historic information. In our dashboard, you're able to see the total utility consumption as well as total spend across the whole company's portfolio. It detects leaks, flag errors, and generate tasks so teams can take action right away. It shows you how much money you're losing due to tax inefficiencies and how much money you're losing due to energy penalties. As well as it lets you create one-click compliance reports. One of the biggest retail brand stores in Mexico was able to detect more than $1 million in potential savings just after minutes of using our system. We currently offer 3 licensing tiers, ranging from $500 up to $5,000 a month. We're targeting mid to large enterprises in the Americas that spend around $3 million or more in utilities, but our beachhead market is Mexico, presenting a $1.4 billion market opportunity. While our competitors rely heavily in consultants and spreadsheets to analyze and compile the data, we are fully automated in real time. Other platforms are built for ESG reporting and compliance, but us, we're built different. We're built for profitability, helping companies cut energy waste and costs. I'm Iñaki, the CEO. I previously founded a VC-backed fleet and fuel administration system where we help the public transportation in Mexico recover more than $2 million a year in fuel theft. Later, I became the CFO of a health tech company. On the other hand, my CTO and friend, Jose, has worked for global companies like Asana and IBM. He also created, bootstrapped, and sold a grocery delivery company in less than 2 years. Global giants like Cartamundi and Pilgrims are already using Climatta to cut energy waste and cost, and we're all ready for global rollout. Since changing our revenue model, we have been growing consistently 25% month after month, and right now we have coverage in 15 different countries, connecting more than 120 different utility providers. We're currently helping our customers manage more than $130 million in utility spend.
Last but not least, we have Daleel from FinFlow.
Meet Amina, 35-year-old entrepreneur. She runs a successful clothing brand in UAE. Her finances are managed in Excel, scripts buried in folders, and bank statements on her phone. When she decides to get a loan at the bank and grow her business, after months of waiting, she is rejected. Why? Her financial documentation is a mess of spreadsheets. She can't afford a proper CFO. It's too expensive. She relies on a junior accountant who doesn't even know the loan requirements. And she's not alone. 3,000 businesses in MENA get rejected daily for the loans they desperately need. And that's exactly why we built FinFlow, an AI-powered CFO that transforms your messy Excel files into bank-approved loan applications in just under 10 minutes. FinFlow AI also becomes your daily financial assistant, which autofills your financial model, analyzes cash flow, and gives you recommendations on how to cut expenses. Here's how it works. Amina signs up and starts for free. Our AI CFO asks a couple of questions and builds your financial workspace. She then connects an accounting system like QuickBooks and uploads bank statements. FinFlow pulls together all your scattered financial data and creates comprehensive forecasts and generates loan-ready bank documentations. But that's where it gets really powerful. Our AI CFO works 24/7, tracking every payment, predicting cash gaps, and telling her exactly when she can afford to hire new staff or expand inventory. As a result, Amina gets approved for a $150,000 loan and grows her business by 40%. There are 16 million SMEs in MENA and Central Asian regions struggling with financial planning and getting loans. But that gives us an $8 billion market opportunity for FinFlow. Most SMEs, they are choosing between expensive CFOs, basic financial planning tools, or manual lending platforms. FinFlow combines all three. AI-powered financial intelligence that gets you loans faster. I'm Daleel, CEO, serial founder with an exit in e-commerce, ex-CEO at a Series A level startup, helped more than 100 companies fix the cash flow. Amir, CTO, he built tech architecture for 3 major banks. His systems processed more than 50,000 mortgages worth over $500 million. And Daleel, CEO, he took his import business from 0 to $1.5 million in sales, scaled to 40 people team. We are at 6K MRR right now, growing 10% month over month. One of the top banks in Kazakhstan is signing a $200,000 annual contract with us to purchase 1,000 licenses of FinFlow for their customer base.
So thank you so much for joining us on the demo day today. And also thank you for those online for tuning in.